If you're a mom with postpartum hairs and you like animal crackers, if you like budgeting at 8:30 p.m. while your house is asleep, then you're in good company because today I'm sharing my March 2023 budget. So let's get into it. Hey guys, welcome back to my channel. Snacking on my animal cracker here. I hope you don't mind this more casual hangout video for this budget with me. But in this season, I'm just trying to record videos when I can because life is a little bit crazy. I just got back from a weekend in California with my baby, and we're actually not sick this week, which I know, knock on wood, but it'll happen again very soon. But just got to get some stuff done. So I wanted to share our March budget with you. It's going to be a big month because we are receiving part of our tax refund. Also, stay tuned for our February 2023 budget report, which is coming out very soon, where I will walk you through our whole budget for February, because that'll also play into this month as well, that you'll see. So February and March, they were big months. So let's take a look at this budget for March. If you are new here, I am married to my husband Jacob. We have two little boys, Peter, who's almost 3, and Jack, who is 9 months, just about 9 months. And we live in Portland, Oregon. We own our own home. So here's what our budget looks like for the month of March. So this is our budget template that I use every month. You can get this budget template on my shop. I will have a link to that down in the description box below. It's an instant download, works in Excel, Google Sheets, all the things. You can check that out there. I also did a tutorial video of that recently. You can check it out here, and it'll walk you through how to use this budget template and customize it for your situation. But you can see this is the income section. We have Jacob's income and my income blocked out, as well as other. So Jacob works in marketing as a W-2 employee, and he works remotely all from home. And then I have my business here on YouTube, so I pay myself a salary out of my business each month. And then I also have an other income, which is our tax refund. And I have this blocked out as well for privacy. So for our tax refund, we live in Oregon, and so we have state and federal tax. And for both of those, we actually did receive a refund, which I guess was good, but it's because we actually made less money last year. We also did have a baby, so that also contributed to it. But a lot of it was because we made less money. And because I had a baby, I took more time off from my business, and so I made less from my business overall last year, but that's okay. You know, I kind of view that as like a maternity leave, and I'm home more with my boys. I haven't been working as much, so that kind of makes sense. Obviously, I would like to make more money, but we received refunds because we were withholding more taxes and paying quarterly payments, and we didn't need to pay that much. But we did get our taxes done in February. We got one of the refunds in February, and then we're going to get the other one in March. So budgeting for the one that we will receive in March, because I know it's coming. So all of this together, I'm expecting around $15,100 for our income this month. So we have a zero-based budget, which means all of our income equals all of our money out between expenses, debt, and savings. We are debt-free besides our mortgage, so you won't see a debt section in our budget, but let's hop into these expenses. The first thing is our tithe. We are Christians. We believe in giving to our church and other organizations, so that's going to be first thing in our budget, as well as African New Life. We support 2 children in Rwanda through African New Life. Next we have is our mortgage, and you may notice that our mortgage is more expensive than it was last month. So our mortgage went up. It's now $2,287.04. We do have a fixed rate mortgage, so you may be thinking, why is your mortgage changing if you have a fixed rate on your mortgage? Well, it's changing because of property taxes. Our property taxes this year were over $6,000, and this was a bit more than it was last year. So we pay our principal, interest, taxes, and insurance all together in one payment, with the taxes and insurance going through escrow. And so they increased our monthly payment to reflect that increase in taxes, to make sure that we're withholding enough to pay for this next year of taxes. So before we were paying $2,206, and now at $2,287. So went up $80 a month. So, you know, just because you have a mortgage and you have your rate locked in, or even if you pay off your mortgage, that still means that you're going to have some sort of housing expenses like taxes and insurance, and that can definitely fluctuate as well and increase over time. So that's okay. You know, it is what it is, and it's just got to be that. The next thing we have is our HOA, which is $121.46 each month. And then we have water, sewer, a budget at 100. It's usually about 100. Natural gas at 100 as well. This has been going up. I'm sure that your utilities have gone up too. Ours have for water, gas, and electric. And so trash, we pay every other month. This month was not a trash month. Electric, I'm also budgeting $100 for that. That has like doubled in cost from what it was before, which is crazy. We're not consuming more electricity. It's just doubled in cost. So we try to be really mindful of turning lights off when we're not using the room, as well as using LED bulbs for everything, but it's just a cost is what it is. Next we have is internet at 62. This was another expense that went up, and that they just were like, hey, no, it's going up. It is what it is. Okay, so 62, it used to be 49. So this month, for some reason, just like everything went up this month. Then we have our phones at 110. This is for mine and Jacob's cell phone. Next we have is insurance for our car at 122. Then we have life insurance at 52.89. We have a policy on myself and my husband Jacob, a term life insurance policy. Then we have groceries at $4.50, and I get a lot of questions about this, so I feel bad reiterating this every single time, but this doesn't take into account all of what we would spend on groceries as a family of 4. My baby is still being breastfed, so we don't have any formula costs. He is eating little solids right now, but obviously he's not eating a ton. But our toddler obviously eats, and then myself and Jacob. But we actually are also doing HelloFresh, and we've been doing HelloFresh for over a year now, and I've shared about it here on my channel. And when I share about it, I have a link where you can get $150 off to start and check it out. And if someone uses my link, then I get a $10 credit. So I've had all these credits build up, and so I've been receiving free HelloFresh for a bit here. So thanks if you've used my link. The $10 really have added up, and we love doing HelloFresh every week. I'll link a video here where I've talked about like breaking down the cost. My parents do it. They pay for it all themselves. They absolutely love it. They do it every single week, and they say that it saved them so much money because they're not like eating out nearly as much. And we've been cooking more, like learning how to cook, eating at home more, eating more vegetables, which is great, having more variety in our meals, which has just been fun. So we're big fans of HelloFresh. I've really enjoyed it, but that cost is not being factored into here. If it was, we'd be spending maybe like $600 to $650 a month on groceries between all of that. Next we have is eating out. We budget $150 for eating out. This usually consists of just takeout on Friday nights because I'm not dragging my whole family to a restaurant with 2 little kids, and also my kids have food allergies, so it's just way more of a hassle than it's worth right now at this age. I wouldn't want to spend money on that right now. Next we have is gas. We're budgeting $100 for gas for the car. Then we have fun at $50. We'll see if we do anything fun. I love that we're getting into more springy time weather. Hopefully we can do some fun outdoor things. So we'll see. Next we have is miscellaneous at $100. You always need to have a miscellaneous category because there's always random things that come up during the month, and they may not have like a certain place to go. So miscellaneous is there. Next we have is Peter's school, which I also have blocked off, but my son Peter does go to school 2 days a week, so like little preschool daycare thing, and he loves it, and so we have that cost. Next we have is the Roth IRA. So we are now going to be putting money into our Roth IRAs for 2023, and super excited about that to increase our contribution there. We haven't put anything to our 2023 Roths yet, so we are starting at $1,300. I think we'll do $650 to each month, and the limit for 2023 that we can contribute is $6,500 to each Roth IRA. So we plan to do that for mine and Jacob's. So $1,300 each month for now through December should get us there to that $6,500 each. So hopefully we can reach that goal. We are also contributing to Jacob's 401k through his employer and receiving a match there, and that is the investing that we are doing this year. Next we have is college. We are putting $100 each month into each boy's 529 college savings plan. And I have like the Roth IRA in college in expenses because this is money that goes out of my bank account. And so I just like to keep that all in this section because that is like not mine that I'm keeping track of. Those are all like money that goes out of my account. So altogether we have $7,126.39 of money that's going out. So now let's look at the savings section. So this is all the money that I'm keeping track of, like in sinking funds and things like that. So first off, we have is the emergency fund, and surprise, surprise, I guess that this is like jumping the gun here for February, but in February, we are going to be complete with our emergency fund. February, like I said, was a crazy month for our income, so definitely subscribe and stay tuned for that because we did something big with money, so you have to stay tuned for that. But with our tax refund and something else big that happened, we had a lot of extra income and we were able to finish our 6-month emergency fund, which feels so good to have that complete. If you're new here, my husband Jacob was laid off from his tech job during a mass layoff in October, at the end of October, and it just really opened our eyes to wanting to have more in our emergency fund. We had about 4 months, 3 to 4 months of expenses saved, but we wanted to increase that to 6 months plus. So we did increase that and we finished that in February. Also, side note, my husband did get another job and he started his new job in mid-December. So he was only unemployed for about a month and a half. He did collect unemployment, got a small severance, and we actually didn't even have to touch our emergency fund during that time, but it was a really big wake up for us, especially with having a full family and little kids that we didn't want to have to worry about again. So we aren't putting anything else to the emergency fund. That should be done now at a full 6 months of necessary expenses saved in our emergency fund. Next we have is our opportunity line item. And this is new, and you'll also see this in the February budget as well. We have something maybe coming up, so we're putting money into an opportunity fund for when that time comes. So that's kind of where every extra penny is going right now, to save for that, and maybe I'll talk more about that later eventually. But for right now, I'm just calling this our opportunity fund, our futures fund that we're saving for things that we don't fully have figured out yet, but may cost money. So we're setting that aside. $6,248.61 is that amount. Next we have is Jacob. Jacob gets $200 of personal spending money each month. I get $75. And the reason why that's different is simply because Jacob likes to spend more money than I do. And I would rather have more money go towards the kids. Honestly, I like spending money on like kid stuff. So he gets $200, I get $75, and that's fine. I barely spend money on myself. Next we have is extra giving. We put $50 a month into an extra giving fund. That allows us to say yes to additional giving opportunities when they come up. Then we have gifts for things like wedding, baby shower, bridal shower, birthdays, like all those kinds of things. We save $50 a month for that. Also, I forgot to mention, but we are now contributing to all of these other sinking funds. We kind of paused that when we were working on aggressively funding our emergency fund. But now that that is done, we are adding these sinking funds back in. Next we have is clothing, $25 each month into clothing for myself and Jacob. Then we have vacation/wedding. So my little sister is getting married in the month of April. Super excited. I'm a bridesmaid. I guess I'm the maid of honor. And my whole family is going to be going down to Southern California for the wedding. So we have some expenses associated with that. So we're putting $400 to that this month. And you'll also see money going to that in the month of April. Next we have is Christmas. We are, you know what, actually I'm not going to put anything to Christmas because we have credit card rewards, and I basically just use that to fund Christmas because we have a card that gets us 1.5% cash back on everything through USAA, and at the end of the year I just redeem that and I use that for our Christmas fund. Previously, in previous years, I did actually save money every month in a sinking fund for Christmas, which is a really great way to do it. But honestly, we put basically everything through that card. I pay it off in full every month, like multiple times during the month. And as time has gone on and life has gotten more expensive, we definitely have a lot of credit card rewards dollars coming through there. So I think that that'll be plenty to fund Christmas this year. Next we have is medical. So we are on a high deductible health plan through my husband's employer, and with that we get to use an HSA, which is awesome. The HSA, you put money in before taxes, you can actually invest those dollars and then it could grow tax-free, and then you could use that money to be spent on qualified medical expenses tax-free. It's the only type of investment you can do with a triple tax advantage, so we want to take full advantage of that. So we are contributing the full amount to max out the HSA, and our plan is to not touch it right now. We want to use that more for long term. So instead we are planning to pay out of pocket for all of our medical expenses. Our deductible is $4,400 for our family for the year, and our max out of pocket is $6,400. So another spoiler for February. You'll just have to also go back and watch the video. Pinky promise, okay? But we actually saved already the full deductible for our medical plan. I wanted to have that saved so that when we have to take the boys to the doctor, actually I went to the ER in January and I haven't received the bill yet, but I know it's coming. So to just like have the money set aside to cover that deductible, I know we're gonna hit that. And then we'll probably work towards that max out of pocket, but that's when things hit, like we pay 20% and the plan pays 80%. So we may hit the max out of pocket. I'm not so sure. I know I'm just planning we'll for sure hit that deductible though. So we already set aside $4,400 for that. So I'm actually not going to be saving for additional medical expenses right now. If we get to the point where we end up having an expensive medical year, I'll figure that out like down the road, and you know, that'll mean less to one category so I can put more to medical. But for now, we've saved the full deductible of $4,400. So I don't feel like we need to put more to medical right now. Next we have is dues and subs, $50 a month, and this covers things like, you know, car registrations when they come up, Costco membership renewal, the zoo renewal, like all those kinds of things that come up annually. It always seemed like they came up at like the same time each year, the same month. So I like being able to split this out over the year so that we don't have like 1 month where our budget is like made up of all of these annual dues. So next we have is car maintenance, $75 each month for car repair kinds of things. Then we have house maintenance at $400 each month because we are homeowners and we need to save towards replacing things in our house if they break. Next we have is household at $100. This is for things like toilet paper, paper towels, detergent, soap, like all of those Costco things would go here to household. Next is kids at $250. Honestly, I feel like I need to start increasing this to $300 somehow, and I just feel like there's been so many things for the kids. Like having 2 kids has not doubled the cost that we had with just one, but I feel like maybe it has at this point with inflation of everything else. I feel like it's getting kind of close. We have 2 boys, and so like we haven't had to buy a lot of clothes for Jack because he's using just basically all the hand-me-downs. But we have bought, you know, clothes for Peter. He's like getting up to the next size, and so February was kind of an expensive month for kids stuff because we had to like get the next size clothing for him for springtime wardrobe for this next size. But things like diapers, toys, baby gadgets, like I just bought like spoons for the baby, you know. So just all those kinds of things would go here. So $250 each month. I might have to bump this up to $300 because lately we've been spending more than that. And I don't feel like I've bought a bunch of unnecessary things for the kids, but $250, okay. So here we have a grand total of $7,923.61 for savings, and the total out is $15,050. But you can see here our difference, which should be $0, is at $50 because I removed that from Christmas. So I'm putting every extra dollar to that opportunity fund, like I said. So I'm gonna add that in here, $62.98.61. So that is a look at our budget for the month of March. As you can see, our total out now equals our income at $15,100. It's going to be a crazy month with this extra bit of income coming in, but we have a plan for it. So if you're planning to receive a tax refund, make your plan for it so that you know where every dollar is going, whether that's to an expense, savings, wherever that's going to be. I'm excited that we can start contributing to our Roth IRAs again and adding to this opportunity fund for future things should they happen. I'm sorry, that's so vague. Okay, so thank you so much for hanging out watching this video. Don't forget, if you want to check out this budget template, you can get it with the link in the description box down below. Also, if you want to learn more about budgeting and how to create your own budget, I have a course all about budgeting, and I will leave a link to that down below as well, and that'll walk you through how to create your own budget to fit your life and your financial goals. So with that, I'll look forward to seeing you in the next video. Bye.